Welcome to the Fox Den here on the Fox D Network. My name is Heath Douglas, and today with us on our show, we have a very special guest, someone that can be considered one of the big names in the business world, with the likes of Elon Musk and Andrew Carnegie. He is a three-time successful serial entrepreneur, currently head of Global Visions, and is a visionary in the world of looking to the future in business. Please welcome to the show, everybody, Mark Iwanowski. Mark, thanks so much for stopping by on the show.
Yeah, thanks. Great to be here, and look forward to our discussion.
All right, no worries. So there is definitely a lot to get into today with not just your own personal story. You were in the NFL and all that, but you also have a lot of great tips, tricks, and ideas for folks when it comes to even starting their own business, be it selling handcrafted stuff to even the local mechanic, and also just the ins and outs of just how to start a business for those that might be hesitant or even just worried of how to start their own business and get on the right track with that. But before we do get into all of that, just want to highlight our sponsor, and that, of course, is this network's coin, the Fox D coin. The Fox D coin is a totally community-driven coin that has no pre-mine and no developer's wallet that is keeping the coin held behind a paywall. Fox D is a 100% transparent coin that's open to everybody and anybody, making it where the coin is for the people and by the people. The unique advantage that Fox D offers is what we're utilizing right now, the Fox D network. The coin does give everybody the opportunity to be seen on our network and gives your content a chance to shine, with your audience growing with you and the network. We're always accepting new guests, streamers, and contributors to the network. So if you want to expand your brand, you know what to do. Check us out on our website at foxdnetwork.com. That is Fox, the letter D, network.com. Or you can always support the coin as well at foxdcoin.com. That is Fox, the letter D, coin.com, where you can download your own wallet, or if you want to buy some coins yourself, you can help us out on Crex24, BitSales, FX, and Free Exchange. So, starting off about yourself and your humble backgrounds, tell us kind of where you came from and how you went from playing in the NFL to working in the business world and how you got your company started.
Yeah, that's an interesting journey I was on. I was fortunate to be able to do my undergrad at University of Pennsylvania and later got a master's at Caltech. So I'm not sure how I got in there, let alone got out, because the average IQ I think at Caltech's like 180.
Yes.
But it's an amazing place, and one that I really enjoyed. I had some of the professors that wrote the textbooks on the various classes that I was in.
Goodness.
It's just amazing place. And I was fortunate enough to get to play in the NFL for a few years, as you pointed out. So I kind of never thought I was going to be good enough to play, and fortunately I got to play for a bit. Played with the Jets and the Raiders. And I learned a lot there, and later applied it in the business world to the things that are going to make you a success. Because in the end, what is a team sport like football, right? It's in the NFL, it's very, very competitive.
Sure.
Right? It's the most extreme level of competition you can have. So you've got to be laser focused on the things that are going to make the team and yourself a success there. And it's all about the team, right? I mean, there's no single player on the team that, can do it all. And you have to bring, the incentives and the motivation. John Madden was the head coach of the Raiders at the time. I'm dating myself a little bit, but you talk about a guy that was able to really incentivize and motivate players. John was the epitome of that. He was one of the best, knew the game as well as anybody. And at the same time, really knew how to motivate these 300 plus pound linemen in particular. A whole bunch of stories there I could talk about for hours, but point is I learned a lot in just in that process. And then I had the fortune to jump into some startup opportunities. The first one I was in was a robotics company, underwater robotics, by the way. So we did stuff for the offshore oil market. We did stuff for the Navy, U.S. Navy, where we built neutralization systems for mines, detection and neutralization. So it was a play into what was then called the dual source world, right? Where you built technology that could be applied for both government and commercial use, and very different business models. I learned there that when you're operating and selling into the commercial space, you're selling into a marketplace that has very different criteria than selling into the government business.
Right.
So, you really had to learn the differences between the two and then apply those very different models, to build successful businesses there.
Right, exactly. Well, and you did mention about like, how in the NFL you do learn a lot about like character development and all that sort of stuff. What are some things that when you were going from the NFL to the business world that you were able to learn while you played sports? And what did you take with you from that into the business world that we could, as many people who are in business can apply to their lives today?
Yeah, yeah. Well, I think the area around understanding what you know how you're going to develop a successful strategy, right,
Hmm.
and building a team model around that where you're truly operating as a team, right?
Right.
That's the biggest thing in and of itself.
Sure.
Today I teach classes on, in Startup 101, why startups succeed and fail. And you look at a lot of things, and one of the big failure items, as an example, is a single founder, right?
Hmm.
The issue there is that founder doesn't have anybody to discuss, to challenge, to have, you
Right.
know, trade-off discussions around what's the best path forward, that type of thing. When you're playing in a team environment,
Hmm.
you're recognizing that no single player can do it all,
Right.
and that's probably the biggest takeaway I took from my playing days. The flip side of this, by the way, is there's a sad statistic in the NFL today, even at the salaries they're making today, that 2 years out of the NFL, 80% of players have gone bankrupt. Uh,
Yes.
and it's because they haven't figured out how to personally make the transition,
Right.
manage capital, manage cash, manage the things that are going to make them a success when they come out of the game. And so it's a two-way street there, because
Absolutely.
it is a different world when you move from playing sports for a living to building businesses.
Right.
But at the same time, to the question you asked, there's those common denominators around things like incentivizing the team, acting, and recognizing the team metrics. And
Hmm.
today, by the way, a big part of the professional sports is becoming analytics itself.
Hmm.
There was that famous movie a few years ago, that really brought that message out from the Oakland A's baseball team
Yep.
here, in my backyard. That analytics and understanding all of the nuances of what it takes for a team to be successful,
Yes.
um, also applies into the business world, right? So
Hmm.
it's taken all of those, call them success metrics, and optimizing around those that come into play. And the other thing is the competitive side of things, right?
Hmm.
When you look at playing in a professional sport or college or high school, even you the high school game is even getting very sophisticated, which is interesting,
Yes.
because they're running pro offenses now, and they're running those types of things that really help to build success, for them. And it's a point, you're constantly trying to change uh, your analytics so that the other
Hmm.
team in that chess match isn't able to stay ahead of you, and you're trying to stay ahead of them.
Right.
So you've got this constant dynamic of looking at the things that are going to make you a success as a team, and they change over time as the players on the team change, their skills, their talent levels, et cetera, et cetera. So you're constantly adjusting, people and process, and now technology, to bring the optimal mix of the three for success, in winning a game. And those same traits apply in the business world.
No, absolutely, and I completely agree. And kind of what you were talking about with a lot of players that do transition out of sports is, I think that's one of the biggest things that so many of these guys miss is they think that it's just about playing ball. You go out to the court, you go out to the field, and then once you retire after 5 years, 10 years, whatever it is, that oh, I can make it in the real world, and oh, all that stuff. My contract guy, my agent, nah, what he said, nah, that doesn't apply to me. But then when you get into the real world, you find out, oh, a contract for a house. Wait, how do I negotiate this? Because you think your
Right.
agent will do all that for you.
Right. And relying on them and not having the financial wherewithal yourself is where a lot of players, as they make that transition, really stumble because they're they've taken the wrong advice because they don't know better and they haven't
Yeah,
learned themselves. What's this? Without getting into specifics, there are a lot of players that you know I knew that as they came out of the game, they invested capital into deals that made no sense at all.
exactly.
And then they ended up losing all of their net worth and they had no income coming in suddenly. And, and they have to essentially start all over. And it's a
Hmm.
challenge. So, I try to help through the Retired Players Association, try to mentor some of the players while they're still even playing
Right.
to be thinking about that future point and really plan accordingly. And a percentage of them get it right. They do a very excellent job,
Sure.
but unfortunately, there's a large number that still don't.
Oh no, I completely agree. And I think a lot of it too is because people don't really understand money itself. Because a lot of these guys, even in some of like second, third string guys, when you're making 100,000, 200,000, $1 million, you think that $1 million stretches and stretches and stretches forever. But you got to understand, once you're done playing, that $1 million contract is also done. It doesn't follow
Right.
you into the next year and the next year and the next year in retirement.
Exactly. Exactly. So yeah, so clearly that transition, is a challenging one. And by the way, I actually work with some vet organizations now because they have similar challenges as they're coming out of the military.
Right.
It's a huge cultural shift that you're having to make,
Exactly.
right? There are those common denominator things that I've talked about, but there's also tremendous differences in cultural issues. When you're in the
Mhm.
military, you pretty much have a playbook for everything. When you
Correct.
go into the real world, you have to develop your own playbook, right? You
Right.
have to really, and you have to recognize, things are changing all the time around you. So you have to try to stay one step ahead by being proactive and assess the risks
Right.
that you're taking as a business. And that's something I learned later in my career, both with my startups as well as I was Oracle's global chief information officer when I took them into the cloud business.
Wow.
And there, I had people working for me in 150 countries around the world. It was a very different world, and we were transitioning the company from selling software to our clients
Mhm.
to now managing that software on their behalf. So I
Right.
had to actually change a lot of the culture inside of even Oracle to address those kind of differences. So, whether you're talking a startup business as it transitions from a pure startup with no revenue to a few million to 10 million, so on and so forth, uh, you have to reinvent yourself as that leader. And by the way, I was very fortunate. I had two leaders, Dr. Bob Beister at SAIC that started SAIC, grew it to $8 billion before he ended up
Wow.
retiring. And Larry Ellison did the same thing, right?
Right.
That's very rare to find a CEO, a founder CEO, that has the ability to change themselves
Mhm.
to recognize the change in how you have to run the business as you move through those various stages of the life
Right.
cycle of a corporation. Uh,
Exactly. Well, and you mentioned about like, when normal talking about, being ahead of the business and, getting ahead of the curve for the future is, normally people when they do think of the business world itself and moving up that corporate ladder is a lot of people just assume it's pure luck and not really and just being at the right place at the right time. but rather it's a lot to do more with, like you're talking about, with innovation and really just old fashioned hard work. So my question is, why do you think a lot of people do see it, the business world, as being that kind of luck based thing instead of really the hard work side of it?
Yeah, that's a great question, because when you really look at, like in my days of running this digital transformation business at SAIC,
Hmm.
it was all about understanding, people, process, and technology, and where the bottlenecks exist. And then
Hmm.
as the firm evolved, you were constantly having to revisit what was going to work on a go forward basis and assessing your risk, because
Right.
you have to take risks in a business in order to be successful and innovate. If you
Exactly.
don't, you're going to die, because other people are going to innovate you out of business.
Right.
And so there's that dynamic that you have to constantly stay and ask yourselves every day, you know, how do I optimize my time, and how do I look to develop an ROI for any expenses, whether it
Hmm.
be product development expenses, whether it be customer development expenses, what that combination of where you spend capital to optimize the growth of your company. And
Yes.
and you just see too many times that startups flounder. Even CEOs that were successful in building a startup, many of them flounder or fail when they try to take the company to another level, because they
Hmm.
aren't able to make that conversion in their own minds, that they have to operate differently. You focus on different things. When you're at that very early startup stage, you're trying to capture your first clients.
Right.
When you're in a growth stage, now you have to recognize how to manage a lot of people,
Hmm.
and incent those people. And if you're like in an Oracle environment, you're incenting people remotely because they're working for you from every part of the globe, and you can't be there every day to be with
Right.
them. So again, you have to learn that the things that are most critical at different junctures in the life cycle of a firm change dramatically as
Yes.
you make those shifts. And you, as the founder or leader, have to change in order to know how to focus on the most important things.
No, and you're absolutely right. And I think that's one of the biggest issues a lot of companies make, is they think that the right thing at the right time will just plop into their lap, and they'll see that Facebook ad or that Instagram ad that'll be perfect. That's what I was looking for. And you can't do that. You have to constantly be on your feet, talking to clients, getting out there, making sure you are ahead of the game, because like in anything else, you can't make an apple tree grow any faster by just making it grow faster. You have to actually prune it. You have to make it work for
Yeah,
itself to be able
yeah,
to have that fruit of your labor.
yeah. You bring up a great point, because when I'm mentoring startups, those founders and startups, I find there are two types of them, and many of them, I'm an engineer by
Mhm.
training,
Sure.
so I can empathize or sympathize with the issue of engineers want to build things,
Yes.
and they think they know what their customers are going to want.
Hmm.
So they go in and their heads down, and they're building or coding or whatever to build that, but
Right.
they don't spend the time with the customer base to make sure they're building the right thing. So what happens
Absolutely.
is they go build this thing, they find out it's not what the customer wants, and they've got to start all over. So
Yes.
I guide them to say, look, you have to spend at least 50% of your time and your resources of your company early on to do nothing but spend time with prospective customers. So you get
Yes.
sure understanding, and then you build the product, not the other way around,
Right.
which I see 70-80% do. And the 20 to 30% that don't do it that way tend to be more successful because they do get it and they go out. And yet you'll find a lot of CEOs ultimately are much better in CTO roles,
Hmm.
where they can focus on the tech stack, and that's what they're good at and want to do. So over time, a lot of times you will see that transition of founding CEO moving into a CTO like role, away from those things. And if in a healthy company environment,
Hmm.
and if you're trying to guide them at a board level or whatever, you're trying to make sure people always operate to their sweet spot, to their strengths. And so, if you find that early CEO that is too much focused on tech and not enough on customer development. You want to help guide the organizational dynamic to shift who's doing what within the company.
Yeah, correct. And I completely agree with you on that, because a lot of companies, they're kind of putting the apple cart before the horse. They have the vision of where they want to be, but if you're not putting the customers to drive that business, then you get to where it's like people get stuck in that moment of, well, how come the company's not growing? We thought we would have this business growth and that business growth, and it's like, no, you didn't listen to the customers and what they actually wanted versus what you think you kind of
Right.
need, sort of thing.
Right. Yeah, it's really about paying attention and focusing on what the customer's needs are. And then, the other thing, in the startup world is, I teach a class, like I said, on why startups succeed and fail, and have actually helped set up ecosystems in strange parts of the world, like the Republic of Georgia and
Right.
in Poland, where my family roots come from. Both countries have made some big strides in that regard, but there's a learning process to even build out that ecosystem. Everybody wants to have an ecosystem like we have here in Silicon Valley. Well, that doesn't happen overnight. It took 30 years, 3 generations even, for this area to evolve into, the leading location for startup capital. But
Right.
the bottom line is you have to have all those building blocks to make it a success. And
Right,
when you're talking,
exactly.
when you're working with those, the startups, one of the big issues that tends to cause failure, probably the number one, is they don't pay enough attention to ensuring they have enough capital to get to that cash flow break-even point. It's amazing that
Right.
they'll spend on things, not thinking about optimizing, and they'll run out of cash before they're able to get, even if they have a great technology solution. You see so many startups, unfortunately, fail because they haven't put the right emphasis on managing their financial metrics. And the big single biggest metric in that world is something called LTV to CAC ratio, in my opinion. And what is LTV to CAC? LTV is the long-term value you're going to get out of that customer.
Oh, yeah.
How much revenue you're going to get, how much, in terms of contribution margin. And then CAC is customer acquisition cost. So it's how much sales and marketing does it take to close a customer.
Right.
And invariably, what you see with a lot of startups is they ignore that. They just say, well, we think we can grow this revenue stream in this hockey stick-like way.
Exactly.
But they're not thinking about what it has to take to do that. And that ratio has to be at least about 3 to 4 LTV to CAC in order for you to be on a growth trajectory so that you are going to get the cash break-even before you run out of cash.
Yeah, exactly.
And there's things you have to constantly do, back to what we talked about a minute ago, to set your pricing and your contract strategies as an example, so that you will get enough revenue out of that customer, and that you're going to protect them as a customer. You're not going to have them turn over, because you're going to be doing one of the other things that tends to cause failures is lack of customer support.
Yes.
Not doing enough to keep the customers happy, right? So you're building
Exactly.
products and you're doing all this stuff, and you don't have the product, you don't have the customer strategy for support, right? So you get a lot of turnover. Well, that shortens your LTV. And the flip side of it is, how much you have to spend on sales and marketing is a function of 2 things. Is the product right for the market? Back to what we talked about a few minutes ago.
Right.
Is there high demand for it? Is it disruptive enough? Is it unique enough? And then how good is the sales and marketing team in terms of generating leads and then closing deals?
Right.
And
Exactly.
so that's the tax side, right? So if you do nothing but focus on those 2 things, you're going to have a much higher probability of success of
Absolutely.
getting the cash flow break even before optimally before you run out of cash.
Exactly. You're totally right. And even talking about business itself and growing it and stuff is, you have been in and around the business world for a long time. And in terms of where you were now, again, I'm not trying to date you, back to the 1500s or anything, but in terms of business over the years, what are a lot of changes that you have seen from maybe 20, 30 years ago in business to, 2021 that we are now? And how has that changed your perspective on how business works overall?
Yeah, another really good question. In fact, I did a talk not too long ago on technology and how fast it's accelerating knowledge, right?
Hmm.
If you look back at those curves dating back thousands of years, we were on this very almost flat trajectory, and it's only in our lifetime has that curve gone almost vertical,
Right.
right? And so we've learned so much more in the last 20 years than we did in the last 200 years, and we learned more in the last 5 years than we did in the last 100 years, and
Right.
that keeps getting shorter and shorter and shorter.
Hmm.
So there's two things going on there. One is technology is driving everything. I'll
Oh,
give you an extreme
absolutely.
example of that. Okay, uh, uh, there's a robotics company that I'm mentoring that is looking for where they can sell their product offering, and they've homed in on the janitorial services market. Believe it or not, the least tech
Really?
market in the world. Right? You'd think there's no way tech's going to ever disrupt that market. Well, guess
Right.
what? Robotics can disrupt that market, and it's driving the cost and the amount of people that are needed to do those kind of services, whether it be office cleanup or maintaining
Hmm.
offices or whatever, using robotics. So there's a technology disrupting the most basic service business you can imagine. So
Right.
my point is that's happening in everything.
Hmm.
And if you look at technology and software, and let me talk about software for a minute, because
Sure.
quite frankly, software, I kind of grew up with the software being in its earliest renditions to what it is today. Even 10 years ago, 5 years ago, I would say, certainly 10,
Right.
uh, it would take several $1,000,000 to build a new product to get it to market. Well,
Hmm.
you can now build that same product because the software tools have gotten so much better
Hmm.
in, less than $1,000,000 and less than
Right.
maybe $500,000, which
Exactly.
means you can get a product built much more efficiently and faster to market. So that change is what's changing everything. We're in this incredibly fast change period where
Yes.
they were accelerating to, there's a group out at Stanford University that studies the future, right? And they forecast that in our lifetime, we're going to know everything there is to know about anything if that curve just continues to get it steeper and steeper and steeper. And
Yes.
it has. That curve has been one we've been on forever, and it's
Right.
just accelerating now almost to the point of vertical. And guess what? When it goes vertical, what does that mean? Infinite knowledge, right? Well,
Exactly.
you're not that far away from that part of the curve. And areas like, as an example, where life science and IT are now converging
Hmm.
because you need IT to analyze DNA, all
Right.
that very complex DNA stuff. We're going to have personalized medicine because we can simulate based on DNA structures what medicine is going to work for whom, as opposed to what we still do at this very minute is trial and
Exactly.
error. Well, you need a blood pressure pill. Oh, here, try this one. Oh, no, that causes all these problems. Here, try that. Well, once we get this relationship between an individual's DNA fully understood, and that's going to be through IT technology doing the number crunching on that data, we're going to be able to say this is the right medicine for you because we can simulate each case and understand it. And so
Hmm.
there's where, in my personal opinion, the biggest breakthroughs are going to occur in the next 5 years. That and the fact that one of the few positive things that came out of COVID is it caused the FDA and the government organizations to recognize, yeah, we can get things done in a year as opposed to taking 10 years, to get a vaccine into the marketplace. And
Right.
it's
Exactly.
it's changing those underlying ground rules that are allowing that acceleration to occur.
No, and you mentioned about, with COVID is, the world did deal with COVID in a very strange, interesting new way, because we did see a lot of the way that businesses not only operate from, for example, a brick and mortar store, but also how they had to adapt to, being kind of more on the curb, away from people, online, all that sort of stuff. And do you foresee this kind of just being maybe a fad for now? I mean, sure, there might be some things that might stay that way in certain regards, but do you see this kind of whole online curbside thing just being a fad for now until COVID's over? Or do you foresee it being much more front facing in maybe the next 5 years, like you're saying?
Yeah, no, I think we're never going to go back to the 2019 models per se.
Hmm.
We will go to some equilibrium point because if you're talking about a business and virtual business, even I in my Oracle days, right, I would hop on a plane and go around the globe to go be able to at least reach out and touch people occasionally, even though I had the tools even then to do everything virtually and remotely, which I had
Right,
to do most of the time because, having people in 150 countries,
right,
there's no way you can be there all the time. But
exactly.
what this COVID situation has done is convinced corporations, forced them to
Hmm.
recognize that this model of virtual interaction is an efficient model, but it in and of itself is not perfect because there's still that hard to describe thing of being in the same room together, being
Hmm.
able to truly, see body English and all of the things that go
Right.
into that that will always be there. So I think the equilibrium state will be in is one where when it's viable, stay virtual. When there's
Yes.
a need or benefit of getting together, and so it'll be more like planned periodic face-to-face meeting type of
Hmm.
things, it'll be that. And let's face it, there's a lot of people that work in large companies in particular, or even smaller ones, that have decided this model's the model I want. I can get out of bed at 8:15 and be in my office, quote unquote,
Yes.
10 minutes later, right? And I don't have an hour commute like unfortunately some people here in Silicon Valley have,
Yeah.
you know. And it's taken the traffic, by the way, way down on the freeways, and
Oh,
as
for
a
sure,
result,
which is great.
yeah, yeah, exactly. But the point is, I think we won't pretty strongly believe we won't go back to the 2019 model. There were companies as large as IBM that said, well, we're going to try this virtual thing. And then they came to the conclusion right before COVID, nah, we want to get people back in the office. Well, they're finding, they had no choice during COVID. And now they're
Right.
finding, yeah, they are able to operate more efficiently. But I have to tell you, it's a very different way to manage when you're managing
Hmm.
virtually than when you're managing and face with people. And
Correct.
I learned that in spades in my Oracle days because again having people all over the globe working for me,
Right.
you have to, particularly if you're doing things like software development, you're using offshore resources where the cost of those resources are 20% or less of what they
Hmm.
are to use the same development resource here in Silicon Valley or even other parts of the US. You have to recognize you have to manage that process differently. And there are technology tools like Slack and others that are allowing you to
Hmm.
collaborate more efficiently
Sure.
than you could in the past. And they're getting better and better all the time,
Right.
allowing that virtual connection. So the tool sets, the technology is getting better. Even what we're
Yes.
doing here today is constantly getting better. And at the same time, there will always be points where that human FaceTime will be the right thing to do. And in certain businesses like restaurants and the like,
Right.
hospitality, hotel, by definition, you have to be, in touch
Yes.
with people. So, but even those industries, like the hotels are automating more and more to the point where they're putting robotics into clean
Yes.
rooms
Exactly.
where you can self-check yourself into your room now and use your smartphone to get in the smart lock door in your hotel room. And all of those kind of things are, continuing to evolve. but you will always have some balance with that human touch thing that I don't think will ever completely go away.
No, I agree because I think there's a lot of stuff that, like you said, when you're talking about maybe in the business world, we've seen where definitely there is a lot in terms of the way that we now interact with emails and, memos and all these sort of different, like, hey, we got to have a meeting today at 5. Well, now you really don't because you can all just do it like real quick. Okay, let's get out in something like this. Okay,
Yep.
let's just do 5 minutes real quick. Okay, everyone here, great. Okay, we did this budget meeting. Okay, awesome. And you're done. You don't have to take 30 minutes, an hour out of your day to like, okay, we got to go to office 326. And no, I mean, this is it. You can eliminate
Yep.
so much time and money and effort that you would
Yep.
normally spend having to take time out of your office day.
Yeah. Yeah. And the other thing that's happening in the technology space, you were asking what's different today. I actually lived through in the late 80s, the first call it rendition of bringing artificial intelligence into the market. But the technology itself, the infrastructure wasn't really ready for that yet.
Right.
And so it really didn't take off. But a few years ago, that evolved into something called machine learning, where the machine can now teach itself, right? So
Right,
it takes
exactly.
data and it answers the so what questions so much more efficiently than you and I can. And because
Mhm.
it's a machine, it can crunch numbers a million times more
Oh
faster than we
gosh,
can come
yes.
to a conclusion. So AI with machine learning is now even writing its own programs. Software, it's writing its own programs.
Yes,
So you don't need a
exactly.
programmer, and it can do that so much more efficiently and faster than we can as humans.
Absolutely.
So some of the Elon Musk and others that are warning that AI is going to be a dangerous thing, they're right because the issue is we have to be able to manage that, and when we become less capable and efficient than the machine, those science fiction movies about the machines taking control,
Yeah.
we're approaching that in the next 10 years, where
Yeah,
just because of the
exactly.
steepness of that curve and what, they there was a famous thing on Facebook not too long ago where they had their, what are called their bots
Mhm.
talk to each other, right? These are robots built
Yes.
into their software code, and they had them communicate with each other. And they started talking in a language that we did, that the Facebook people didn't understand, and they had to shut it off. But these computers were talking in what sounded like gibberish, but they were communicating with each other
Right.
because they figured out a more efficient way to communicate than we can with our, English or whatever
Yeah,
speaking
right,
skills,
right.
right? And so when those kind of things happen, the goodness of all that is it makes things that much more um, efficient in terms of data crunching of because we're at the point already where our human brain cannot take in the
Mhm.
amount of data that is being generated.
Right.
We surpassed that years ago, but the computer can, and it can spit out answers relative to what that technology, what that data is saying,
Yes.
in ways that will enable us poor humans to be able to leverage that information.
Mhm.
So, aside from robotics, the other area of technology that I think is really disruptive and game changing is, in fact, in this AI/machine learning area
Mhm.
that will, in the next 5 years, we're going to see some pretty incredible things happening. And it's already
Absolutely.
starting to where, you got translation engines now. You can take your smartphone and you can talk to somebody in a foreign country face to face,
Mhm.
and they're understanding in their language what you're saying.
Right, exactly.
And by the way, this thing today, I'm going to go back and date myself a little bit. When I
All
was at
right.
NASA, we actually did design review work on the space shuttle.
Oh,
Today,
cool.
this thing has more processing capability than the space shuttle had.
Oh, yeah.
More processing capability. I mean, it's hard to grasp, but
Right.
this thing we carry in our pocket, is in and of itself game changing. And eventually, this will be embedded with our brain as companies like, Elon Musk Neuralink company is looking to
Mhm.
do, where you connect your brain to the internet. So instead of having to type in a Google query, you just ask your brain and it gives you
Yeah.
the answer. That's all happening. It's
Yes,
happening, you know.
it's nuts, but in a
So
good way, nuts. I mean,
yeah,
it's just,
well, hopefully in a good way, right? You know,
you're right, right, exactly.
if the computers do what those science fiction movies do and decide that we're the problem because we're one of the few species that kills itself in
Yes,
wars and the like, they're going to stop that, right? And how are they going to stop that, right? Well,
no, I know.
if we have
Hopefully,
control on the other side. So that's that we've got to make sure we control this. But coming back to the key point here,
yeah,
to your question, technology is continuing to accelerate. And so, in order to stay ahead of that curve, you have to be very agile and very nimble in your business model, whatever business model it is, and recognize that technology is disrupting even markets like janitorial services, right?
right.
So, every business from, basic core things like that to the highest end technology business are constantly being disrupted. You know, the Oracles of the world
Hmm.
shifted while I was there from developing its own technology to deciding time to market's more important and we're going to acquire the technology. And so
Yeah.
while I was there, we did $30 billion worth of acquisitions where we acquired a lot of our competitors like PeopleSoft and Siebel and the like.
Hmm.
Uh, but that allowed the company to continue on a trajectory of bringing new technology to play. So the
Absolutely.
biggest players, you know, go down that path, and then you've got Microsoft making with its new CEO on board, making the big shift themselves to the cloud.
Hmm.
They're reinventing themselves. You've got the Googles that are now kind of reaching a point where they're trying to figure out what they want to be next. They've reorganized, and some of the founding members have taken more back seats in the company now, and
Hmm.
it's becoming
Right.
more of a big corporation and less innovative. But that's the cycle that everything goes through. That's why there will always be startups, because
Yeah,
startups are the
exactly.
ones that have to take the risk to be successful, but you have to manage those risks, like I talked about earlier, financially and otherwise, in a way where you can get that innovation to market. And once you get that innovation to market, then the bigger fish will gobble up the smaller fish, and that's the world we live in, right? But the point is, there will always be that life cycle of smaller companies evolving into bigger and bigger companies, and
Exactly.
or becoming bigger companies through some combination of internal growth um, and playing out from an acquisition standpoint themselves. So
And
when I work with companies, just to kind of touch on those 2 points,
sure. Yeah.
I deal with companies anywhere from that startup phase and those issues that they need to understand they have to manage very carefully to be successful. And even then, you're not going to be perfect, but you're going to improve your probability of success. And then
Yes.
on the other end of the spectrum, I work with, private equity firms and venture capital firms. And, in private equity, what we're doing is we're looking at where we can, in fact, do what are called roll ups, where we
Yeah.
consolidate companies together into models that grow into bigger businesses. And by the way, M&A success rates are not very high,
Hmm.
and there's a reason for that because they don't do certain things, personal opinion, that if they did would improve their probability of success of that acquisition dramatically. Simple things like
Hmm.
getting the future, state of where the combined businesses are going to go, what the governance model is going to be between the acquired management team and the existing management team, just basic things. And
Yeah.
then, consolidating technology pieces and the like. You gotta have, if you do that homework right up front, which many do not, they get enamored with doing a deal and they push the
Exactly.
deal through, and then oh shit, they got, excuse my French, but they've got all these issues afterwards that cause them to fail. Whereas
Yes.
if you just spend the time up front getting that alignment done properly, your probability of success is going to go way up. So
Exactly. No.
that's the continuum I work in. I work with big companies figuring out how, to improve their people process technology stack, to
Hmm.
optimize how they're going to perform, constantly taking on new technology because everything I just talked about dictates that they do, because if they don't, they're going to fall behind their competitors that are. And
Yes.
then on the other end of that spectrum is the startups themselves that are bringing the new technology, and that's all about managing their risks, right?
Yeah.
To get to the point where they can either go public themselves or be acquired by a bigger company.
Right. No, and I completely agree. It is starting from the ground up and, getting all those things put together to make it explode. And, with that being said, for those that might be watching who might be starting their own business, they might be thinking of going into, be it, like I said, painting mason jars or maybe, mowing a lawn or something like that. What are some tips and tricks that you can give to people to say, like, hey, here's what I did to skip all the hard stuff. Here's what I learned that I can give to you to say, hey, don't do this or do this to make it a lot easier to transition from, maybe a small startup business to, hey, I'm now a medium-sized business.
Yeah. Well, it comes back to some of the things I touched on earlier, but the biggest one is understanding two things. Understanding, when I, as an investor, and I do angel investing today, I invest personally in startups as well.
Right. Sure.
You look, and as an investor, whether it be with a venture capital firm like I've been in the past, or angel investing,
Hmm.
you look for certain things, and there are three, because you're looking for success factors, right?
Right.
There are 3 or 4 things that go into doing a deal.
Hmm.
The biggest single one is, do you have a unique, disruptive way to offer your service? Or
Hmm.
another way of saying that, if it's, lawn cutting or, something core like
Sure.
that, you have to look at the value proposition, and you have to set your pricing and or how you go about capturing customers in a
Hmm.
way where you are ensuring that that customer is going to feel the amount they spend to get that value
Right.
is less than a third of what they're spending. And it's kind of a, that's not an absolute metric, but there's about a, if the cost they're going to spend is equivalent to the value they're going to get, then they're going to say, well, I'm not going to change why should I change from what I'm doing now? Because it's risky. So they
Hmm.
have to have enough of a belief that changing from what they're currently doing as a prospective buyer of your service
Right.
is going to be worth the risk of changing from what they are currently doing. So
Right.
you have to build, and this is where the marketing and branding and value proposition up front come into play.
Sure.
But in the end, that's what you have to do to capture those clients. You have to convince them that there's a better way to do things. And so a typical startup, there are 2 kinds of startups that actually are successful: those that bring that disruptive technology,
Right.
and disruptive differentiating way of doing things, and that could be either how they price things or how
Hmm.
they deliver things, or the core technology itself. And then the other type is, and it's worked in Europe relative to the US, there are actually venture firms over there that look at successes in the US and then build what I call Me Too companies in
Right.
Europe that do the same thing that haven't been brought to Europe yet,
Yeah.
right? And excuse me. So you can do the Me Too model, but you have to do it in an area where that technology or that solution has yet to reach geographically,
Yes.
right? And places like the Republic of Georgia, like I've talked about, in Poland and Eastern European countries,
Hmm.
they're getting more now developing their own disruptive
Right.
technologies. But
Exactly.
in general, stuff starts from Silicon Valley, US, and more so even now China and the like,
Yeah.
and goes to other parts of the world. And so you can make that model work, but only if geographically that technology has not reached that location. Because if you're
Correct.
trying to compete with equivalent solution offering, the only
Hmm.
thing you have left then is price.
Right.
And you can't win by simply, I mean, even the huge telcos of the world ran into that problem. They were on a path to zero profitability because they had no differentiation. So what did telcos do? They moved into adjacent businesses, like
Hmm.
bringing internet services, like bringing, their own television capabilities, their own application offerings beyond simple voice and texting services, because they had to to differentiate themselves from their
Exactly.
competitors. So it happens at all cycles, from the hugest companies down to the earliest startups, but it's differentiating, having a different way, unique way to bring your solution to the marketplace that's so
Yes.
critical. The other thing, by the way, and this is a hard one for a first-time entrepreneur, but the
Right.
other one we look for as investors is experience. Haven't been there, done it before. Well,
Hmm.
so how does a startup guy or gal get that if they don't have it themselves? Well, they either need to bring in a mentor, they need to bring in, some board or advisors that have the knowledge and experience, to augment their own, abilities to build that business. So you can
Exactly.
solve that dilemma by surrounding yourselves with mentors or others that have been there, done it, had the experience of doing it. And that's why, I really enjoy working with startups a lot, because quite
Hmm.
frankly, I can help them from making the same mistakes I have and scars on my back,
Right.
from things not to do as well as things to do.
Well,
Right.
it's kind of like being a parent. It's kind of like, son, now don't go touch the oven. Why, Dad? Because I said so.
Yeah, right, right. Well, but you touch on another very good point. And I see in mid-sized to large companies, this is one of the issues they run into. I call it the tough love syndrome, right? As a
Hmm.
parent, you love your kids, but you also have to know to discipline them when they're doing the wrong thing,
Correct.
right? And what you find with a lot of businesses, and I can think of some I'm dealing with now, where I'm trying to transition them into more of a tough love model of, hey, set expectations with them, don't
Right.
tell them what they are, get them to say what they can, in fact, produce and do within your organization, but hold them accountable then
Yes.
to hitting those numbers. And if they stumble, figure out why they're stumbling. Is it the round peg in the square hole that prevents them from being successful because they're missing something in their own experience and capability base? Or are they have family issues? Are they just not
Hmm.
motivated? Do they want to, do they, want to not be in the business they're in any? You
Yeah.
have to ultimately constantly spend time, developing around a tough love, which is, get them to get the organization to understand what needs to be done for success, and then ensure the right people are in the right place to accomplish that. And for those that are asked to do things, and it happens so often, the classic old Peter principle thing of being elevated into a great sales
Hmm.
rep, suddenly having to asked to be the sales manager. They
Right.
fail a lot of times because being a manager of reps is very different than being the rep seller, right?
Correct.
So you have to have the ability to either make that transition, like I was talking about with CEOs in general, by recognizing the need to change and re-engineer yourself, or you have to recognize that you don't want to put people in roles where they just are not going to be successful for some set of reasons like I described.
Exactly. No, and you're right. And it's one of those things where I think a lot of people, when they do start their business, and again, I admire, the headstrong determination and will that they have of, no, I'm gonna do this, I'm gonna make it, I'm gonna, but then when they fail, they're like, can someone come help me? You're like, well, if you kind of ask somebody ahead of time,
Right,
like, hey, where do I not make mistakes? It
right.
would be where you're not falling flat on your face about every other year, every other month, whatever, issues you run into.
Yeah, 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 yeah. And there's another interesting issue there: the dynamic of changing um, um, cultural models within companies. Because the millennials that are now coming up and taking on management roles. Initially you had pre-millennials managing millennials. Now the millennials are moving into the role of being managers and sometimes
Exactly.
managing more, quote unquote, older people in their organization than themselves. You, that millennial culture has a very different view of how to develop and motivate and be successful. In fact, I have a good friend, colleague that works with me on some of these kind of opportunities that deals with the millennial issue. and he's written a book on the subject of how to manage both ways, right?
Right.
And so, there's that new dynamic that has come into play because there is a generational difference in, when I grew up, it was sort of, you just did what you were told to do.
Exactly.
And now it's no, you have to have buy-in, and you have to motivate people to be successful,
Hmm.
and you have to and you want them to challenge the norm, because when you get into very large organizations, one of the big problems in big organizations is you have the white corpuscle syndrome.
Right.
They need to change, but you have all this layer of doing it a certain way that they don't want to change because that's how they've always done it. And so
Hmm.
this is where, again, that tough love thing has to come into play, because you have to break through
Right.
that dynamic
Hmm.
where they don't want to change, and they're going to fight
Yeah.
just like white corpuscles do when you're attacking a foreign substance in your body. They're going to attack
Yes.
it and kill it if they can, right? Uh,
Exactly.
and I've seen this in spades with the largest corporations. I did some consulting with the CEO of a $20 billion corporation who wanted to recognize personally the need to innovate and
Hmm.
change how the company operated. And so we built out a internal team that was going to generate new products to bring into the market based on their capabilities. And we kept that somewhat isolated from the rest of the business, because you have to operate that very differently than you operate the big mothership $20 billion corporation from a rules and regulations and risk
Hmm.
management standpoint. Well, long story short, ultimately, that CEO's next level managers said, "Well, this is challenging us. You're taking business away from us. We want to absorb this stuff back into our business." And in the end, they lost the innovation piece because they simply didn't do it. And it happened with my first startup, where
Right.
we agreed with management that acquired our company to keep us independent and isolated from the mothership. At the time, this was a startup we sold to Raytheon in
Hmm.
the robotics area, and they
Right.
agreed. But then that management team ultimately left, retired, moved out of their roles, and the new management came in and said, "We want to assimilate this into the mothership." Well, when they did that, they lost all the people, they lost all the technology, they lost all the innovation, uh,
Hmm.
because it's a different way of running things when you're running that innovative risk, have to take risk play, to when you're the $20 billion corporation, you don't want to take any risks, and
Yes.
therefore you get into that mode of you know having these kinds of failures occur because of that.
Exactly, exactly. Well, Mark, it has definitely been a very informative, very fun ride getting to talk to you. You've been amazing inspiration for business owners everywhere. And, again, hopefully all your deals go through in the future and all that sort of stuff. And again, thank you, the viewers, for watching. Mark, again, thanks so much for being on the show.
Absolutely great, happy to do it, and happy to talk to any of your listeners anytime.
All right, no problem. And guys, again, we'll definitely have all the links for his business down below in our videos and where you can get in contact with him if you have any questions. But until then, folks, again, thanks so much for watching. Hope you have a wonderful morning, noon, night, or evening, or wherever you are in the world. Hope to see you next time here on the Fox